We're with Chris Laughton of Farm Credit East. Chris is the Director of Knowledge Exchange at that organization. Welcome, Chris, and tell us a little bit about what some of your key responsibilities are.
Thanks a lot. So in my role at Farm Credit East, I'm responsible for economic research and industry analysis. So I look at all the diverse sectors of Northeast farming, fishing, and forest products that we serve, and I produce things like industry outlooks, reports, analysis, that sort of thing. I also produce our monthly e-newsletter, the Knowledge Exchange Partner, that goes out via email every month to our customers, and our webinar series. We typically host webinars on current topics every month, and our next one is actually to review the results of the Dairy Farm Summary Report. That's on noon on May 3rd, and people can sign up at www.farmcrediteast.com/webinars. Dairy is our largest industry sector, so as you can imagine, I spend a lot of my time on that.
And a key topic in that call, and if this video is being viewed after that date, folks can still go to your website, as you said, and find that recorded information. But a key topic will be the Northeast Dairy Farm Summary, representing the financial performance of some 300 dairy farms. Considering the low milk prices that we've all been experiencing, what do the numbers show for these farms this year or in 2018?
Yeah, well, 2018 was really a very challenging year for dairy producers around the country, and that was certainly true as well for the Northeast. Just to give you a little quick background on the Dairy Farm Summary, we've been producing it at Farm Credit East for 39 years now, and we basically take the financial results of hundreds of Northeast dairy farms of all sizes and analyze them. This year, if you took an average of all the farms in the study for 2018, the average farm posted a loss of about $40 per cow, or about $19,000 for a farm of our average herd size. It is important to note, however, that we do see a wide range of results. Some farms had losses of more than $1,000 per cow, and others showed profits of that amount. So if we break down our sample, about 40% of the farms in it had positive net earnings, a little less than half. That's not exactly something to cheer about, but it does show that there are a fair number of producers who were able to realize at least some level of profit even in a down year.
What are some of the key result areas for producers that highlight those who had more financial success, perhaps?
Well, you mentioned a couple of things to me before we started recording. One was income over feed costs or production per cow. Our income over feed costs in our study came to $9.50 for the 2018 year. The USDA Dairy Margin Protection Program calculation was, I believe, $7.53 for the year, but the measurements are a little different. The USDA assumes that you're purchasing in all of your feed and paying the average price for that. The people in our sample, many of them grow a majority of their feed, so the costs are a little different. So that's why our income over feed costs are a little different. Production per cow for the farms in our sample actually declined a little bit in 2018 from the prior year, less than 1%, as opposed to the typical 2% gain that we usually see, probably indicating that most farmers didn't push as hard for the maximum production per cow in response to those low milk prices. One of the things that we see is that economic efficiency, instead of just achieving the highest production, is really the key there. We actually have a chart in the report that shows profits compared to production per cow, and there really isn't a major trend there, which indicates that high production per cow isn't always the most profitable. In the report, we break down the financial results by cow and by hundredweight, so people can interpret the results across farms of different herd sizes.
You work with more farms than are in the summary, and you also have a handle on the general situation for dairy farms in your region in the Northeast. How are the farms in the study typical, or do they have some differences from the average farm in the region?
Yeah, I looked up the average farm in the region in the USDA Ag Census, which just came out. And for our Northeast states, the average herd size is around 130 cows. In our study, the average sample was 478. So our study sample is significantly larger than the average of all the dairy farms in the region. But it's also kind of interesting to note that on the Ag Census, a fairly large number of farms have fewer than 20 cows. So they're not what I would call a full-time commercial enterprise. And that brings that average herd size down. So I'd say we have a good cross-section of somewhat larger than average farms. In the report, we divide the results into 4 categories: 1 to 100 cows, 1 to 300, 3 to 700, and 700 plus. And we have a pretty good mix of farms within each of those 4 size groups.
The details on any individual farm, of course, are anonymous, I'm sure. But what does a participating farmer, how can he participate, and what does he receive for his participation?
Sure. Yeah, as you note, we're very conscientious about confidentiality of individual farm data. So no individual or potentially identifying data is revealed in any of our reports. However, people that participate in the DFS can receive a confidential, personalized My Farm report, which compares their individual farm data to the benchmark, so they can see areas where they might be doing better than average, or perhaps have some room for improvement, and that's free of charge. Basically, any dairy producer who has a business relationship with us, whether that's a loan or financial service such as tax prep, can participate in our dairy farm summary at no cost.
And to participate, they need to contact their farm credit contact, I would presume.
Yeah, they can talk to the local branch office, and they can give them information on how to do that.
Are there any other highlights that jump out at you from this year's program?
Yeah, well, 2018, you know, I don't want to gloss over it. It wasn't a great year. If you believe in milk price cycles, which is questionable at this point because they haven't really recovered the way they should, if you will. 2017 would have been an up year, but it was a pretty weak recovery year. 2018 then was a down year when milk price dropped. And in 2019 already, we're seeing some increase in milk prices. So hopefully 19 will be a better year than 18 was. So in that context, 2018 was a tough year. Many farms posted losses. Many farms increased their borrowing as a result. But we also saw a lot of farms that reinvested in their businesses. A few farms that expanded. You know, farms that invested in technology like robotics and things like that. So I don't want to paint the picture that it's all bad. There were farms that did pretty well, and we do break down our report into profit quartiles, so you can look at the top and bottom profit farms and see areas where you may possibly have room for improvement on your own operation.
Well, we thank you, Chris, for bringing us up to date on this year's program. We've been speaking with Chris Laughton, who's with Farm Credit East, and he's been talking about the Northeast Dairy Farm Summary. Thank you, Chris.
Thank you very much, Joel.
And this is Joel Hastings for DairyBusiness.com.